let's bring on board our second set of experts. We've got Sandip Sabharwal joining in on the show, Shrikant Chauhan, Nuresh Mirani as well joining on the technicals. Sandeep, just afternoon firstly. Let's pick it up from where we left it off with Gaurav. Just wanted to understand, what are you making of the telecom stocks right now, and do you think much of the positive is already in the price?
Obviously, some part of it is in the price because the move in the stock prices have happened this without any tariff hike in a way. So it's all in anticipation that now the competitive intensity will reduce and tariff hikes will play out. And that's also evident now because once tariffs started to stop going down and Geo also started focusing on, is not still focusing, I would say, on higher profitability, but maintaining market share. So we will see some impact on profitability if tariff hikes actually play out. Now, the current prices build in, I would say, 50-60% of the tariff hike possibility already. But when tariff hike actually start, then I think it will help the stock prices sustain.
Which is the best play in telecom? There are like 3.5 stocks there. Either Reliance, which is housing Jio in a way, Vodafone, the latest love of the market, Bharti, or Indus Towers.
And we're forgetting Bharti Hexacom as well.
Oh yes, that's true.
So the best play is Bharti only because that's the pure play which has profits, which has a decent balance sheet, and which has market share and still gaining market share. Vodafone idea is more about hope. Now the hope is that at some stage they will make profits. I'm very doubtful that even with their current balance sheet, etc., if shareholders will ever get a 1 rupee EPS also from this company. So I think right now, because of the speculative up move, the moves are happening. The other thing is that in any industry upcycle, the weakest player tends to benefit the most in terms of percentage gains because they were in a bad shape, so the incremental improvements are much more than the companies which are always already in a good shape. So I think that's one factor working for Vodafone Idea.
So that's the view, and Vodafone Idea clearly, inching towards that 20 rupee mark. Remember, just a few months ago, it was just a single-digit stock. So from there has been that massive recovery that has taken place on that one. But the big star right now is Reliance with that 3% gain, and then Bharti Airtel too chugging along. That was a discussion on the telecom sector, but let's put the spotlight right now on what's happening with the market itself. We have Shrikant Chauhan also joining us on the show. Shrikant, hi. What's the next level to watch out for? Is 24,000 something, which is likely to happen in this expiry itself?
Good afternoon. Yeah, I think the markets are it was consolidating below the levels of 23,700 for almost 3-4 days. And after crossing these, now we are again witnessing broad-based rally in the market. So now, based on option statistics, the next level to watch out for is 24,000. But if we just extend the overall, I'm to say count based on extensions, then the next level to watch out for would be somewhere close to 24,200 levels. So I am of the view that in case if there is any correction because of any reason close to 23,700, then we should look for adding some positions. But at these levels, I think it is better to ride long trades up to at least 24,000 levels. Bank Nifty is consolidating, but for Bank Nifty also, we are of the view that it is heading for at least 53,500 sort of levels in next 1 or 2 days.
Okay, so that's about the Nifty. But Nuresh, what's the view on Bank Nifty? Because that was the big star performer of the trading session yesterday. Today, it's a bit soft, but can't really complain with the 300-point move and very close to 53,000.
So that's been the view for Bank Nifty. Like once we cross 52,000, it gets into momentum. Now we are getting towards 53,000. The best way to ride this trend is to keep shifting the stop losses higher. So now the stop loss shifts to around 52,300 on the Bank Nifty. The structure is positive. We are yet to see a big breakout happen on HDFC Bank, which is where 1740 has been an all-time high, tested 6-8 times over the last 3 years. If that happens, it gives you a big trigger in terms of further upside. So the structure is positive, momentum is positive. Keep a trailing stop loss and ride on. And the view remains same. Private banks look better than PSU banks. And we've seen that continue. Now, if that was not enough, we've got another kicker in terms of Reliance Industries. That stock is coming closer to 3,000, 3,030, which is the previous all-time high. And that has been tested for a few times in the last 3-4 months. If that breaks out, you have almost another 10% of the Nifty weight breaking out. So structurally, we are looking at even the Nifty getting into a momentum phase. The Nifty may look a little overbought, but a lot of large heavyweights are actually breaking out right now.
There was a very interesting commentary coming in from RBI Governor last evening from anniversary Bombay Chambers 188 anniversary, saying that now India is at a cusp of structural shift in the growth trajectory, and he's saying that there's a very strong case of 8% vicinity growth on a sustained basis. If that happens, coupled with fiscal prudence and moderate inflation, can the corporate earnings get a fresh boost for the market also?
So 8% sustainable growth is possible only if tax rates come down and interest rates also moderate. At the current interest rates and taxation structure, especially for personal private consumption, it's unlikely we'll be able to sustain at 8%. So I think the base is good for sustained high growth. Now, what that high growth will be depends a lot on both monetary and fiscal policies.
Let's hear out that soundbite from the RBI governor.
India is at the threshold of a major structural shift in its growth trajectory, moving towards 8% GDP growth in a sustained manner. We are moving towards annual growth rate of 8%. The Indian economy in the last financial year 23-24 contributed to 18.5% of global growth. There have been multiple drivers of this growth that we have achieved and the growth expectation that I am placing before you. It's driven by the various structural reforms which have been undertaken and several other policy initiatives that have been undertaken in the country. Among the structural reforms, at the forefront, I would like to mention the Goods and Services Tax, the GST. Flexible inflation targeting framework is very important because a stable inflation is at the core of long-term sustainable growth.
Stylam Industries is in focus. Remember in the morning we told you about this brokerage note from Investec and how this company over the years has become a bigger company. International brokerages are now covering it. Look at that stock. At one point in time, almost 10% higher. Shrikant, can you do a chart check for us? Is today's move backed on volumes? And from here on, is this a breakout which could be sustained?
Yeah, good afternoon, Ajay.
Good afternoon.
I think, the stock had spent a lot of time below the levels of, or around the levels of 1500, 1550, almost a year, we can say. And now it is again on the verge of absorbing almost all the selling pressure, which was lined up between the levels of 1900 to almost 2000. I think very clearly it is crossing the consolidation trading range, and based on its technical formation, the next level to watch out for would be 2200 to 2250. In case if there is any correction, then again the level of 1800 going to act as very good support for it. But broadly, we are of the view that it is heading for 2250. It's a buy even at current level.
The view coming in on Stylam. We were just talking about the telecom sector, and a lot of ancillaries of telecom sector have started to run up as well. I'm talking about Tata Tele, for instance, that's managed to perk up. You also have names like Indus Tower, of course, which are doing quite well. Tata Communications is trending higher. You also have ITI Limited. So all of these stocks, anything associated with telecom is actually doing quite well. Call it the effect of the auctions that have happened, or the fact that Street is penciling in perhaps some tariff hikes around the corner. All of these stocks are buzzing around. Separately, you also have those cement stocks that we have been talking about. So Sandip, let me ask you on cement. I don't think you have been very positive on this sector. Do you think today's move is just a flash in the pan of sorts on account of news of some consolidation, or there is something which is structurally changed?
The consolidation is always bullish for the industry overall. However, I think in the cement industry, even after consolidation, there will be 5, 6 big players. So it's not that one or two players are going to dominate the industry. That's one part. Secondly, the supply increases are very rapid, and over the next 2 years, continuously supply increase will be more than the increase in demand. Thirdly, we've seen that cement companies have been trying to increase prices since January, but they've been unable to. Every time they hike prices, the prices again fall. The only thing which is working in their favor is the input prices have been moderate. Efficiency gains have played out, and despite lower prices, they have been able to improve profitability. But from here on, that will also be tougher. So I think the cement industry is decently placed, but extremely overvalued in my view at this point of time.
Right. The thing I want to talk about before we let you go is the private banking name. Given that the rally has got, that fresh adrenaline, I recall you were bullish on Kotak more after the regulatory hurdles, and you were talking about as to how that has a bigger alpha to jump up. Have you changed your mind since? Would you now bet an ICICI Bank and HDFC Bank more as opposed to Kotak?
See, ICICI and Axis in any case we hold. So the only incremental addition was Kotak, because what we've seen is that RBI regulatory actions are tending to get resolved within a period of 4 to 6 months, unlike a year plus a few years back. So one of the biggest factors holding back Kotak Bank has been these restrictions, etc., which have been put. That's why it's underperformed in this upswing after underperforming so much for the last few years. So in my view, most negatives are in, and relative to the private banking space, this is decently placed. So for contrarian investors, I think this is a good bet to take, because as the resolution will happen of issues related to RBI restrictions, we'll see the stock move up after that.
All right, just one quick word, Sandeep, on VA Tech. I mean, it's shot up 10% today. I believe that in their con call recently, they've spoken about how they can, do desalination per liter at 9 paisa. Looking at the way water is an issue in big cities like Chennai and Bangalore, can they scale this up to a pan-India opportunity? I mean, the entire company is still available at $1 billion.
The opportunity is very significant now. As all of you know that we've been holding this stock for a very long time for very low levels. So I don't want to be recommending people to buy after the stock zoomed up so much. But long term directionally, I think the company is very well placed. The order flows both from India, Gulf, as well as Africa are likely to be very strong for the company over the next 2-3 years. Next year, EPS could be between 62, 65 to 70, like not this year, next year. So I think people have to decide what valuation they are willing to give the company.
But yeah, Sandip has been a big bull and talking about Tech Wabag for a while now. But Sandip, good to have you on the show as always and get in your thoughts.
If you like this video, then like, share and subscribe to ET Now.